Welcome to the second portfolio update of 2022. This week we have one new trade and one adjustment to Project Booster with a total of $578 of premium sold. The portfolio is currently in a bit of a holding pattern because I don't like trading options when they have earnings coming up. So the focus right now is either on stocks that have already reported earnings or those that will only be reporting earnings after the option's expiry date. Let's walk through each position in the portfolio. First up is Best Buy. This position was put on last week for $128 and is currently trading at 97 cents, so the overall position is still profitable. My strike price is at $90 while the stock is trading at $100, so we have about a 10% cushion before this position gets tested. If we go into my activity tab, you can see that I have an open order to close the position at 40 cents. That's about 1/3 of the original premium collected. Depending on how the markets move next week, I may consider moving this order up to 60 cents and settle for 50% of max profit instead. Moving on to Dick's Sporting Goods. Just a reminder that this is a put ratio spread, but the risk is similar to a naked put at a $95 strike. Even though this shows we are down $24 on the trade right now, the stock has to drop $16 from where we are now at $111 before we'd be in danger of assignment at our strike price of $95. That's about a 14% drop. Not impossible, but we'll have to wait and see. Back to the activity tab, my current order is working to close the position for a credit of $250, and this will only be triggered if DKS moves below the $100 mark and that $100 put starts to gain in value. On to Johnson & Johnson for Project Booster. I posted a midweek update explaining the thoughts and strategy behind the new position. Feel free to click on the link in the top right hand corner. That move was actually early and prices were way better on Friday. This is beginning to get interesting because JNJ is now below the $168 price target. That means if someone bought the stock outright back in December, they would be losing money, whereas we have a total of $450 in premium as a buffer. I also added a new column on the Tastyworks platform that shows upcoming earnings announcement dates. JNJ is reporting before the open on 25th January, which is 2 Tuesdays from now. Like I said earlier, normally I don't like trading options so close to earnings because you can get caught in a large move up or down. However, it does make sense for this position because of how much premium was collected. We basically have a cash cushion all the way down to $160. Again, do check out the update video for all the calculations behind the new profit potential. This position is locked in for now until earnings. We'll see how the stock moves and then decide what to do. Next, we are back in a position with Realty Income, and I want to give a shout out to Thumper on YouTube, who had this trade as one of his picks for the week. Both the option premiums and risk profile were good, and the option expires on 18th February, which is before earnings on 28th February. And it's a dividend stock that I don't mind earning, so it really ticked all the boxes. The put was sold at the $67.50 strike for $75 and is already registering a $25 gain. I don't have an order to buy this position back yet. I'm considering leaving it to see whether it will expire worthless. Finally, my long dividend stock position in Walgreens. I have a covered strangle on at the $47.50 put and the $57.50 call for a total of $1.15. This was put on after earnings last week. If we jump back into the activity tab, there's an order looking to buy it back at 40 cents as a combined trade, but I'm open to closing each leg separately depending on the price movement of Walgreens between now and expiration. That's it for this week. Lots to look forward to next week with more earnings coming up. Hope you have a good week ahead, and until then, take care and invest safely.